Morning, everyone. Hope everyone's doing well. It is Tuesday, September 20th, and it's still kind of crappy outside. So let's dive into this. We have the Federal Reserve meeting that's tomorrow. The expectation, again, is a 75 base point hike for the majority of the consensus here. Let me just check again. We got FOMC, Fed Watch Futures countdown here, and just waiting for it to load. Come on. There's still an 18% chance of a 100 basis point hike and an 82% chance of a 75 basis point hike, which is the expectation now. Before the Fed, there is some interesting stuff going on in the market right now. We're seeing yields very active, right? We have a 2-year yield that's pretty much targeting the 4% region, which we've hit at 3.97. This is a 15-year high. It rose overnight, and then we have the 10-year Treasury yield that crossed the 3.5% mark on Monday, right? This is the first time since 2011. This means that we're still widening the gap of the inversion here. This deep inversion and bearish around the bond market is spooking investors ahead of another very, very thick rate hike decision by the Fed, which starts the meeting today for the September meeting on Tuesday. And as long as inflation continues to surprise to the upside, the volatility will likely remain, with the central bank now clearly willing to bring down price pressures at all costs. So we've seen them talk about consumers, households, all that stuff, and the goal is push down inflation. So traders are pricing in again just about over an 80% chance that the Federal Open Market Rate Committee will lift the overnight lending borrowing, lift its overnight lending rate tomorrow by 75 basis points, which will be the third time, according to CME Fed Watch Futures tool that we use on a daily basis. So that compares with a 20% probability of a huge 100 basis point hike. And even some analysts, right, a very small majority, are even talking about a 125 basis point hike, which is going to be insane. So this is a lot of this increased chance of a massive rate hike is based on the August surprise hotter than inflation reading. Other central banks are also willing to take notice. We saw that Sweden's risk bank hiked rates today by a full percentage point or 100 basis points to counter the environment that it's making more difficult for both companies and households to plan their finances. So volatility is also causing chaos in the equity markets, with major average inching up on Monday, and then we saw a larger push down here overnight. It didn't give back all of the gains, but it gave back a lot of the gains. It even started the upside, the overnight session to the upside fairly decently before giving back a lot of these gains here pre-market. We'll talk about those levels as well. Let's see what else we have here. So tomorrow we do have the Federal Reserve. We start today, so I don't think it's going to be the best trading environment even today, especially for options. You can see theta burn all over the day yesterday. Futures might have a few swings here and there, but I think even tomorrow morning is going to be a little choppy and unfavorable until we actually get that Fed decision that comes out in the afternoon, as well as on Thursday. I think we're going to get a little more of a pronounced trend, if you will. So shares of Ford as well. We have some supply snarls that have been hitting the market. I do want to talk about Ford and energy a little more before we get this day started. Ford, they dropped 5% pre-market this morning after the automaker flagged higher supply costs and part shortages. The situation, which has been a trademark of the supply chain since the pandemic, will leave the automaker with more unfinished vehicles than it expected. About 40 to 45,000 will remain in its inventory at the end of the quarter and cannot be delivered to auto dealerships. So Ford expects to incur an extra $1 billion in costs during the quarter as a result of the supply chain costs on top of the previous $3 billion it outlined in July that was due to inflationary pressures. So the car maker still reiterated its full year guidance, projecting 2022 adjusted earnings before interest and taxes to be $11.5 to $12.5 billion, while the earnings before interest tax for Q3 was maintained in a range of $1.4 to $1.7 billion. So executives will provide more dimension about expectations for a full year performance when Ford reports its Q3 results October 26th. The automaker's largest rival, General Motors, also announced a similar issue earlier this year, saying it's unable to deliver about 100,000 vehicles due to part shortages and some of items like computer chips. So this is going to be pretty interesting. With all these supply chain issues, it's not going to stop. It's not going to start and stop at Ford. Realistically, it's going to affect a lot of things in the market, especially with these inflationary pressures as well, because a lot of this is due to very heightened costs. So again, this puts more pressure on the Federal Reserve, right? Every piece of this moving economy starts to put more and more pressure on the Federal Reserve to increase the quantity of tightening and increase these rates fairly drastically. In terms of strategic reserves from crude oil, right? Crude sales from the U.S. Strategic Petroleum Reserve were only supposed to last through October, after Biden administration authorized the release of 180 million barrels, or 1 barrel per day, over a 6-month period due to the inflationary shocks from the war in Ukraine. Now another 10 million barrels of strategic stock will be put into the market to deliver in November, adding to the recent bout of emergency sales to tame the fuel prices. So according to AAA, U.S. gas pump prices were on average about 3.67 per gallon on Tuesday, down from about a record $5 a gallon seen in June. So that's not that long ago. Though the drop may have been accompanied by recession fears, an aggressive Fed, and a heavy bearish sentiment. So this means the latest announcement will bring the total to 165 barrels out of the 180 barrels that Biden authorized in March to help address the significant market supply disruption and low energy costs for American families. So volumes in the Strategic Petroleum Reserve have subsequently dropped to just 343 or 330 434 million barrels, marking their lowest level since 1984. At the start of the year, the SPR contained 593 million barrels, and it reached the highest point in 2010 when the emergency stock was at 727 million barrels. So Phil Flynn, an energy market analyst at Price Futures Group, said that I think the market should be freaking I think the market should be freaking out about the end of SPR draws. I think when releases end, it's going to have an impact of losing a major product, and it will tighten supplies. He believes that it could add another $5 to $10 to the WTI crude prices. So if that happens, right, when you have a supply shock in the market and you add an increase in the crude oil prices, that's also going to affect the inflationary pressures, which we're going to see into the end of the year. Another thing to note for the federal funds rate, at one point we had a 2 to 2.5 percentage target by the end of the year. Right now, it's about 4 to 4.5 target by the end of the year for the Fed funds futures. And realistically, that target could go up and up and up. If we see a 5% Fed rate by the end of the year, it wouldn't be out of the ordinary. And keep in mind, we have this meeting in November and December left. So there's only 3 meetings to get to that point, meaning that these are going to be at least 75 basis point hikes going forward. So it's going to be very interesting to see how that shapes up in these markets. So to add to that, to give you guys a little, to give you guys a few levels here as we start the day. Again, today is one of those days where I would really be cautious trading. Yesterday there was some volatility, there was some areas to trade off of, but realistically, especially in the options world, it was a little more difficult. So today, what I'd be looking for on the S&P 500 is, can we sustain 3883 to 3886? If that level, that area, that 3-point area can be held out and we continuously rebid, I think that we are going to get some upside in this market, targeting the 3905 area. 3905 is a huge area on the S&P futures. If we get into that area, I'd be watching to see if some guys reoffer this to see somewhat of a failure in the market. But the reality of it is, I think we do exceed that area. Under 3883, look for that downside pressure and look for the continuation into the levels that we saw yesterday, 3,870, 3,850, and so on. So let's see how this shapes up. Let's see what we get into the Fed tomorrow. Realistically, tomorrow morning, I don't think anyone should be trading. They should be waiting with the investors and other traders to see how this market shapes up with the Fed and where we go from there. So with that being said, let's open up these rooms. Hope everyone enjoyed this, and we'll see you all tomorrow.